The United States just threatened to keep a naval blockade on Iran indefinitely, and the world's most important oil choke point is right in the middle of it. Oil prices are jumping, and stocks are swinging. Here's what's happening and what it means for your portfolio. On Thursday, August 13th, the U.S. said it could maintain a naval blockade of Iran indefinitely, vowing more economic pressure to force Tehran back to the negotiating table. The statement came as the standoff over the Strait of Hormuz entered a new, more dangerous phase. And remember, this crisis is months old. It started back in April, when the blockade began, and Brent crude spiked above $100 a barrel, peaking near $126. A peace deal in June brought relief and a sharp sell-off in oil. But now, with Washington doubling down on an indefinite blockade, markets are bracing all over again.
So how is oil reacting? On Friday, Brent crude edged higher, steadying around $87 a barrel, after jumping more than 3% earlier in the week on fears of a prolonged disruption. Here's the key number. Roughly 20% of the world's oil, about 21 million barrels a day, flows through the Strait of Hormuz. Even the threat of a blockade squeezes supply expectations, and every dollar of oil feeds straight into the cost of fuel, shipping, and energy for the entire global economy. Now, the stock market. The pain is not spread evenly. Energy companies are the clear winners. When oil spikes, producers' profits jump and energy stocks rally. The losers? Airlines and travel stocks, which get crushed by fuel costs. In July, United Airlines fell 3% in a single day on this same kind of escalation. And we saw the pattern again this week. Asian markets like India's Sensex and Nifty dipped on geopolitical worries. London stocks opened lower in risk-off trading, and gold, the classic safe haven, kept climbing. Growth and tech stocks? They're in the middle, watching oil feed into inflation fears.
So what should you watch? 3 things. 1. The price of oil itself. A sustained move above $90 or back toward $100 would hit consumers hard and could force the Fed's hand. 2. The Federal Reserve. The July minutes land this week, and with softer inflation, markets are betting on a September pause. 3. The blockade itself. The administration says low oil prices are goal number 1, so how long this lasts and whether Hormuz traffic actually gets choked off is the single biggest swing factor for markets. The bottom line? An indefinite blockade of the Strait of Hormuz is a big deal for oil, and a bigger deal for stocks. Energy benefits, travel suffers, and gold shines. Keep an eye on the $87 level in Brent and the headlines out of the Gulf. That's it for today. Subscribe for your daily finance breakdown. And remember, this is not financial advice.